The Liberal government's changes to capital gains taxation are now in effect. Starting today, 66% of profits from the sale of assets such as a secondary home or cottage will be taxed. The change applies to people making more than $250,000 annually in capital gains. The Liberals introduced the changes in the last federal budget, saying the tax on the richest Canadians will help finance housing and social programs aimed at the middle class. Well, here to discuss more on the new capital gains tax increase is Jamie Golombek. He is a managing director of tax and estate planning at CIBC. He joins us today from Toronto. Thanks for making the time.
Thanks for having me.
What are your overall thoughts on this change, this new hike?
Well, of course, no one wants higher taxes, and I think we have to put it in perspective. So this does not affect the average Canadian. The average Canadian does not have $250,000 of capital gains every single year. That being said, it could affect the average Canadian when they decide to sell a vacation home that isn't qualifying for a principal residence, an income property that they bought many years ago, or even on death, and they have an estate, you have a deemed realization on death. So there are some situations where Canadians could be affected, but again, the average Canadian does not have $250,000 per year of capital gains.
Okay, let's talk about real estate, because the Canadian Real Estate Association said that there has not been a significant bump in housing sales, even though owners had more than 2 months after the change was announced. What do you make of that?
Well, again, I mean, most people, when you own your home, that's a principal residence. And in Canada, we have an unlimited exemption on gains of a principal residence. So this really would only take effect on a vacation property, a secondary property, or an income property. And we certainly are hearing anecdotally, we certainly have clients that have taken steps to accelerate a sale. But at the end of the day, I'm not sure to get some people to find a buyer and sell before June 25th. So I don't think those sales are being recorded. There were some tax planning techniques available where people transfer properties into a court. It wouldn't be reflected in the broader real estate numbers.
Okay, we're having a little bit of trouble with your connection, but I'm going to keep trying here to see if we can, if it stabilizes. I want to ask you about the healthcare sector, because there were concerns. I had the head of the Canadian Medical Association on a couple of weeks ago, and she was telling me that this is going to have a huge impact on doctors. Do you have a concern that that is the case?
Well, again, I mean, the concern is many doctors were encouraged to incorporate, so they have professional corporations in which they operate their medical practice. And of course, the gains inside those corporations are next taxable at a higher rate. So again, the concern is the doctors being able to save for retirement. And again, a lot of doctors who are maybe older may decide, well, it's not worth it anymore, maybe I'm going to retire. But again, the problem is higher taxes. And Canadians already pay a very high level of tax. The tax rate is over 50% right. in more than half the provinces, and increasing the capital gains, particularly for doctors who have incorporated that don't get the first $250,000 at a lower rate in the corporations, is obviously a concern and is causing a bit of financial worries for those professionals.
There are also concerns about a potential increase on so-called brain drain among Canadian entrepreneurs and investors as a result of this hike that will look elsewhere. What are your thoughts on that?
Well, again, there have been some talk if people are mobile, we're talking about mobile executives or other professionals, obviously looking to move to the United States has always been a reality. We just saw numbers released a few weeks ago that more Canadians than ever have exited to the U.S., sort of a record number a couple years ago. So again, this is a concern. If you look at a state like Florida that doesn't have its own state income tax, the top rate there is 37%. Someone who's in Ontario, you're looking at a 53.5%. So there's a whole bunch of reasons, not just the capital gains tax, but higher taxes in general could cause some people where mobile to look to other places, including the United States.
So overall, the government is saying that this is going to tax the richest Canadians. It will help finance housing, social programs aimed at the middle class. Your assessment overall, do you think that this was a well thought out move by the government? And if not, this hike on capital gains, what would be another strategy?
Well, again, I think ultimately the issue comes down to spending and deficits and debt. So obviously the government is choosing to spend on various programs, including housing, among other things. and there's a cost to do that. And one way to do that is to cut other costs. Another way is to simply to increase taxes. They're expecting to bring in $20 billion or so from the capital gains tax. Whether or not they do that will depend on people proactively selling, triggering gains early over the next 5 years. And that remains to be seen whether they're going to collect anywhere near the revenue that they anticipate.
Right. Okay, Jamie, appreciate it. That is Jamie Golombek, Managing Director of Tax and Estate Planning at CIBC.